Welcome back to another video. So in today's video, I'll be going over all my dividend paying stocks in my trading 212 dividend portfolio. Before getting to it, guys, if you're new to the channel, definitely consider subscribing on a goal to get to 2,000 subs. And also at the end of the video as well, if you like what you see, definitely consider smashing the like button and also commenting. It really does help boost the channel to new audiences and helps me grow. So enough for that. Yeah, so it's my usual trading 212 dividend portfolio review. This will be my last update of the year, but if you're worried, you'll be still getting some more videos over the Christmas break. But yeah, this is the last portfolio update for the year, guys. So in this video, I'll be going over every single stock I own, so how they've been doing for me, how they've been performing over the last week and month, as well as a new investing strategies for 2021 and beyond. Sorry. So we'll have a look into the stocks now. So the first stock on the list is 3M. Big massive company. So I'm down just over 1%, but they're nothing too major. They're my highest holding in the portfolio now. 5 shares owned with my average cost at £130. Then next, another big company, pharmaceutical company, AbbVie. So I own 3 shares of AbbVie and I'm currently up just over 3% with my average cost per share is £75. Been performing quite well AbbVie over the last month. Obviously, Warren Buffett's company Berkshire Hathaway made a big investment in AbbVie not so long ago. So this seems to be going from strength to strength. I made a prediction that once they got to $100 in my last video, that they sort of teeter off a bit and usually drop a bit down. But they're over the 52-week high, which was back in around July time. They got to around the $100 mark and then went back down to $80. Now, obviously, again, they've gone from strength to strength. So next we have is my monthly paying dividend REIT, which is AG&C Investment. We were down in the last week, but in the last month they're up just under 3%. And on my investment, I own 6 shares of AG&C, and I'm currently up just under 4%. Obviously, this is not one of the better companies in my portfolio. Monthly dividend payer, quite risky, but the good thing about this is with the monthly income and the share price not being so high, it'd be quite easy to dollar cost average on this company. You can see my average price is £11 and slightly above that now, around £12-13, but nevertheless it's quite a cheap company to buy. My strategy is a lot based on a few good dividend REITs as well as some dividend kings, aristocrats and dividend champions also. So next we have AT&T. So I own 12.23 shares in AT&T with my average cost at £21.67 or $28.66. So again, AT&T, anytime, usually investors say anytime they get under that $30 range, that's a great time to buy AT&T. So they're still down massively in the year, but you can see they've just sort of picked up a bit since November time and reached that $30 mark again. But before that, there was a $30+ stock. Again, a relatively cheap stock to keep investing regular cash into. But many people do say that it could be quite of a dividend trap. AT&T, they have a quite a high yield, I think. The yield is 7.27%, so it is on the high side, not considered high officially, but still not too bad. So next up we have is BP, sorry. They've been going from strength to strength recently. They're up 14.5% in the last month, and not too much movement in the last week. But this was a stock I was massively down in on my free trade portfolio. But I'm trying to make a bit of the gains back. I think I was down around £100-200. I'm not sure. I can't remember now. I think it was 40%. But on this portfolio, I'm up 15.06%. And my average cost is £2.35, which is good as they're now at £2.70. So that's the key with dollar cost averaging. If you're into that sort of type of investing, anytime a company gets below your average cost, you only reinvest money then. I don't believe in that fully. I do believe you should dollar cost average, but don't just buy stocks when they're lower than your average, especially if you're a dividend investor looking for that income. So next is British Tobacco. So I own 2 shares of British Tobacco and I'm up just under 10%. So my average price is £26. Obviously, tobacco companies not really the most ethical companies to invest in, but they're generally great dividend payers. So they have a high yield again of 7.72%. Again, touching on that higher side. So next we have Coca-Cola. This is one of my long plays. Coca-Cola, really good solid dividend stock. Great value stock. You don't see too much volatility with this company. Obviously, apart from March when every stock's in a bit of a fall, but obviously they seem to be recovering quite well. So I own 4 shares at the moment. I am dripping my money back in to try and get the amount of shares that I had of each company in my free trade portfolio. But obviously, I didn't want to buy every single stock at the same time. I don't think that's a wise decision. So I'm up 1.78% with Coke, and my average cost is £39.11 or $52. That's the good thing about trading 2-on-2. You can see how much your average price is in both currencies. Again, a good long-term dividend stock, quite solid. I think they have a nice solid yield of 3.21%, pretty bang on for a dividend yield. So next we have is Colgate, another great dividend stock. So I own 2 shares of Colgate, and my average cost is £63.55, and I'm down just 1% with them. Again, I've still got to buy a few more shares back at the moment. I might purchase one shortly, but they're not down too much at the moment. Still just playing a patient game. Whether that's a good idea or not, we'll see. So next is Hormel Foods. Not much movement with them in the last month, or down in the month, sorry, but in the week, not too much movement. I did manage to pick up a share recently. So I own 2 shares. My average cost is £36.96. I think if we check when I last bought a share, so I managed to buy one for £35 as it dipped, but I think it's carried on dipping, so you can't always, you don't know when the dip's going to stop per se. But anyway, so 2 shares of Hormel Foods. Then next up, another great dividend stock, which is Johnson & Johnson. I've been paying dividends consistently for a lot of years now. So I own 2 shares of Johnson & Johnson at the moment, with my average cost being £110, and I'm up just 0.42% with Johnson & Johnson. Again, this is another play for the long term, another great dividend stock, value stock as well. So then next we have another monthly paying REIT, which is Main Street Capital. So you can see with my investment, I own just 2 shares at the moment, with my average cost £22.35, and I'm up 5% on my investment in Main Street Capital. Dividends due this week for the REITs, so they'll just probably get reinvested straight back into the company. Next up we have is Pfizer, who have created the vaccine. So we've had quite a volatile month, really, just up in the month by just 1%, but they have dropped down a little bit in the last week or so, 4.85%. I think they're pushing for this vaccine to get approved in America, so we'll see what happens when it finally does. So my investment on just over 4 shares, and I'm up 3.88%, and my average cost is £28.21. And if I were to sell now, I'll be selling over the average price, which would be good, but that's not what we want to do here. So then next up we have is Realty Income, and another REIT. So I'm down 3.36% overall with Realty Income. So my average cost is £46.86 or $61. Again, this is a great one for the monthly dividend income. It's seen as the king of the monthly pays in the investing community. So next we have is Royal Bank of Canada. So this stock I am up just under 6% with. So my average cost is £57.91. And if I were to sell now, I'll be selling at a profit, obviously, with the sell price being $82. So next up we have is one of my favourite stocks, which is Starbucks. Starbucks, again, they've been on a great trend, especially in the last month and 3 months. Massive gains over the $100 mark, and I think the above the 52-week high, which was around the $93 mark. So my returns on this, obviously, are just up over 5%, and my average cost is £73.41. Another good, solid company who's consistently growing the dividend as well also. So then we have Store Capital, who is another REIT. They don't pay monthly, but on this company I am up a decent amount, 14.72%, with my average cost being at £21.09. Obviously not, you won't consider these to be the best companies, but you still have a great solid dividend yield of 5.5%. And the ratios all seem to tick boxes there, so quite a solid company. The next up we have is Cisco, just a 1 share owned of Cisco at the moment I have, and I'm up 7.24%, and my average cost is £51.14. Cisco in the month still up 2.51%, so consistently they have been growing. So I do think they'll be sort of back at the pre-pandemic prices not before long. So that's just 1 share of Cisco. Next up we have is Unilever, another great company who I like. I use a lot. Again, with investing, if you're using products of certain companies, you might as well be an investor as well as a consumer. That's the way I look at it. And if you know they're a good company, then why not? So 4 shares owned of Unilever right now, and I'm down just under 3%. My average cost is £44.07, so slightly below the live share price. So the final 2 stocks now in the portfolio, guys. So the first one is the FTSE Emerging Markets Vanguard Fund. Again, this is they pay a decent dividend as well, and obviously they do get consistent growth. So you're pretty safe with ETFs, especially emerging market funds. So my return is minimal, 0.93%, and my average cost is £49.45, which is very, very slightly below the current price. So the final stock on the list is Verizon. So with Verizon, I own just 2 shares, and I'm down 1.8%, and my average cost is £45.30. Again, I've got a few more shares to buy back of Verizon. I did have around 8 shares in my last portfolio, so I do want to build that up. So as you can see, I've got £1,103 in free funds, and as you can see the portfolio value there. So I'm trying to be methodical with doing this. I know you can't really time the market all the time, but I don't want to, regardless, I didn't want to put all my money in at once. So that's the portfolio, guys. So as you can see in the last one, I think my last update was the 29th. So not much growth in terms of percentage gained. I had to get up to around 3.5% up at one point, but now it's just at 1.5% return. So we'll go and check out what stocks I purchased since the last update. So we'll go over to the orders page now. So as you can see, since the 24th of November, that was the last time I bought something before a video. So since then, I bought 2 shares of Coca-Cola, a share of AbbVie, and a share of Hormel Foods. That was all on the 30th of November. And then on the 4th of December and 3rd of December, I bought a share of 3M, a share of BA Tobacco, and a share of Unilever. And then finally, I bought another share of 3M yesterday for £135.55. So that's pretty much it for the portfolio update, guys. I just want to talk to you now a bit about my other portfolio that I'll be opening, which will be back on freetrade, which will be more aimed towards growth. So I'll head over to that now and I'll show you what stocks I have in that watch list, which will be more focused on an ETF growth portfolio. So head over to that now. So we're now on the freetrade app, guys, obviously. So this is the stocks that are in my watch list. We've got the FTSE All World Global Stock Market ETF, Greencoat UK, the Global Clean Energy ETF, as well as the FTSE All World Global High Dividend, FTSE All World, Vanguard FTSE Emerging Markets, which I do have in my trading 212 portfolio, as you've just seen, Global Water, and the Nasdaq 100 and the S&P 500. So I think there's 9 stocks there, which I just need to work out how much my allocations for each portfolio needs to be with terms of how much I'm going to put in. But I always did want to start 2 separate portfolios. I've just not really had the amount of funds to do so, but it is something I'm going to be aiming at in 2021. So guys, I hope you liked today's video, and don't forget to subscribe and like the video as well. And on that note, I'll leave you to it. Take care. Bye.